Okay, so let's start. Let me introduce myself. So my name is Artem Paley, and I'm the professional lawyer with international tax planning and corporate law experience more than 20 years. And I'm the managing partner and the founder of the international law firm Corpus Prava with deep tax and corporate practice. And 2 years ago, we started our digital corporate services practice that gives an opportunity for all users to register a company and administrate the company from their desktops remotely all over the world. Currently, we cover the jurisdictions as Cyprus, United Emirates, and Hong Kong. Now we're launching also the registration in the United Kingdom. We do it by the digitalization of compliance, KYC, identification and verification, the automatization of the major corporate services procedures, including issuing of shareholding certificates, the minutes of board meetings, the major corporate contracts, and etc. You can, in fact, look at the opportunities that are provided by our digital service on the website YouReg.tech. But currently, we invite you to discuss not the facilities and the opportunities that are provided by the YouReg, but to explain what benefits each jurisdiction where we work can provide to you and your business. Mainly, we will speak today about tax benefits that each jurisdiction provides. Let's start from Cyprus. So, briefly, Cyprus is the member of European Union since 2002, with the one of the lowest corporate tax rates in the European Union. There is only Bulgaria as a state that gives lower corporate tax rate. So Cyprus has 12.5% the basic tax rate, but it also provides the special tax regimes for two types of companies. First type of companies, that's the taxpayer that generates revenue as a royalty. So the revenues from the use of intellectual property rights. And this regime provides an opportunity to decrease the annual tax base at 80%, means 80%. And the effective tax base becomes, in this case, 20%, means that from the effective tax rate of corporate tax comes from 12.5% to 2.5%, and that's definitely the lowest tax rate in the European Union. In fact, the same regime, corporate tax law in Cyprus provides also to the lenders that provide loans from their own funds. They also have the possibility to decrease their tax base at 80%. And give me a second. I see that. Okay, yes. Let me introduce Vlada. She assists me in this webinar. Please contact her if. And also, I see that there is a question regarding the subtitles or translation. Larissa, do you see the option in the Zoom to switch on the subtitles with the translation function. I hope yes. So, but anyway, this option exists, and you can use it on other. Yes, I see. So the subtitles are working. Thanks a lot. So, so in fact, with one of the lowest corporate tax rates, Cyprus also, as I already told, provide the special regimes to the two types of companies. So, first type of the company, that's the and intellectual property owner that sells the rights of IP to the market and gets royalty as a revenue. So they have an opportunity to decrease their tax rate to 2.5%. And the same scenario works with the different options, with the different regulations, with the different requirements. But finally, the same rate, 2.5%, could be implemented by the company that lends money from their own funds, so from their property, not lended, but the owned funds, to the third parties. As all European Union countries, so Cyprus implements also value-added tax with the standard VAT rate of 19%, so more or less the same as in all other European countries, a little bit smaller. With special tax rates that are implemented to the businesses like restaurants, hotels, and so passenger carriers that use 9% VAT, and the sellers of the food, they implement 5% tax rate of value-added tax, and in fact the businesses that Cyprus is specialized in quite a lot for many years, like ship management, aircraft insurance, sports betting, house renting, and education. They use zero tax rate of VAT. As you know, during last years, since Cyprus starts to promote itself as an IT cluster, a lot of IT companies were redomiciled from different jurisdictions. Also, it was always very popular for shipping companies that work internationally, and so the question that we're facing on quite often is what's the salary taxation in Cyprus, and as you see, there are two types of taxes that we should discuss. First, that's the income tax. That is where the individual is taxable person, and social taxes. That, in fact, we should speak about social insurance and medical insurance payments. And as you see from this slide of the presentation, when we speak about income taxation, there is the amount of 19.5 thousand euros of annual income that is not taxable at all. And then we have the progressive tax rate from 20 to 35, when the biggest tax rate is 35%, and it's taxable on the amounts above 60,000 euros of the annual income. Besides the income taxation, there is also the social insurance payments that are implemented in Cyprus, and the basic tax rate of social insurance is 12.5%, and with medical insurance, that's called U.A.E. It's the state medical insurance entity that provides the total medical support to the all residents of Cyprus. So it should be paid 2.9%, and these amounts are paid from the company's budget, and from the employee's budget should be paid 8.8% social insurance and 2.6% the medical insurance. So in fact, if we speak totally, if for example we speak about the net salary of the employee, it means that employer pays, besides income tax and besides his part of social and medical insurance payments, also the payments for the individual. So in this case, the social insurance amount is 31%, and the also the 5+%, that's the DC payments. And give me a second, I will see the chat. Also, why Cyprus became for last 40 years one of the major tax planning jurisdictions, and it truly competes with such famous jurisdictions as Netherlands, Austria, Hong Kong, Singapore. It's mainly because of the huge number of double tax treaties signed. That's one of the biggest number in all over the world, which gives Cyprus the opportunity to be the most effective, one of the most effective jurisdictions when we speak about international tax planning, which means that it gives an opportunity not to tax two times the same corporate incomes or individual incomes. So in fact, the full list of the countries you can get from our consultants, or in fact you can look at the full list of the double tax treaties as well as the full texts of these treaties on the official website of the Ministry of Finance of Cyprus. Dear colleagues, do you have any questions regarding Cyprus? Maybe you have some issues that I should describe in more details. I see that there is no questions. Okay, let's go further. So Hong Kong. Hong Kong is very special place, and from the legal and tax point of view. First of all, that's legally, that's the Hong Kong is the special administrative region of the People's Republic of China. It means that that's the part of China. But according to the special agreement signed between Chinese government and United Kingdom, when the Hong Kong was transferred back to China from UK in 1999, to the Hong Kong has been provided the special legal status for the next 49 years, starting from 1999. And right now, that's the state within state. It means that it has its own taxation, its own immigration rulings, its own legislation, both civil, criminal, their own family law, their own immigration law. So they're absolutely regulated separately from the mainland China. And currently, Hong Kong is the only one jurisdiction that, being the part of mainland states, has the and being the well recognized jurisdiction at the same time, provide the pure offshore taxation for the all incomes that are received from sources based outside of Hong Kong. And that's absolutely unique. That provides to Hong Kong it's an absolutely unique position. Besides that, the basic tax rate in Hong Kong is the corporate tax rate is 16.5%, and it goes, in fact, from the old sources, from the sources worldwide. If we're speaking about the local company managed from Hong Kong, including the sources outside and inside Hong Kong. And as you see from the slide, the currently, so the corporate tax rate in Hong Kong is approved on an annual basis. So from the year to year, when they approve the annual budget, they also the Hong Kong government approves the corporate tax rate, and so and during the last few years, the Hong Kong government implements the ruling when they decrease the basic corporate tax rate for so-called small enterprises. And for these small enterprises, which has the profits less than 2 million Hong Kong dollars, which is, as you say, that's something like 250,000 US dollars. They implement the reduced tax rate of 8.25%, and all the amounts above starts to be taxed at the corporate rate of 16.5%. But as I already told, if the income of the Hong Kong company is received outside Hong Kong, it has an opportunity to declare these incomes and obtain the tax-exempt status, which provides zero tax rate. Sorry, I see the question regarding the IT companies. Does it the most favorable regime provided by Cyprus? Let's talk about it later, because in fact, if, for example, you speak about the IT company that sells IT services, then maybe not, just because when the IT services are provided, there is no intellectual property that creates and belongs to the company. And in this case, so it's better the taxation will be the regular in Cyprus, and maybe Hong Kong is better to use in this case. But if, for example, as a result of the IT company activity, you have the IP rights and you get royalties against these IP rights, then yes, Cyprus will look, I think, the best. So, what means obtaining the tax exempt status? That means that every year, when you submit the financial statement to the tax authorities, and you do it by your auditor, and the auditor is obligatory in Hong Kong as well as in Cyprus. Also, the auditor prepares and submits to the tax authorities the special form, the special declaration, that where he proves that the incomes are received outside and they should be taxed at zero tax rate, and then annually tax authorities approves your tax exempt status, and by this you will get the option. That's in fact, from my point of view, very nice, just because once your tax exempt status approved, it could not be argued in future anymore at all. So regarding income taxation, in fact, it's quite favorable for individuals working in Hong Kong. So just because the sorry, it's also the progressive tax rate, but the biggest tax rate of income tax is 17%, with quite big number of allowances, and in fact, it's when I see from time to time that the effective tax rate of people who get salary of something like 6,000, 7,000 US dollars per month, that's something like the effective tax rate is about 12%. But also, there is the pension insurance exists in Hong Kong. Some years ago, it was not obligatory at all. It was pure the contract between the employee and the privately owned insurance company that provides the pension insurance services. But now, after Hong Kong became the part of China, still some regulation starts to be implemented, the new regulation. So the pension insurance became obligatory, and the minimum amount of pensions that should be paid is 5% from company side and 5% from employee side. From employee side, also that amount could be bigger, and employee could pay additionally from his own pockets according to the contract signed with the insurance company. Hong Kong, as well as the old financial and international financial center, has quite a big number of double tax treaties that gives Hong Kong an opportunity to establish itself as a good place for the portfolio companies, holding companies, trading companies. It's the IT business is very well developed, and it's booming in Hong Kong since the last 6-7 years. And as you see from this slide, not only the US and EU countries signed the agreements with Hong Kong, it's also the Arab Emirates, and then Serbia and Russia also has the very interesting double tax treaties that provide quite big number of benefits to all members. Again, the actual options of any double tax treaty could be requested from us, or you can find them on the website of the IRS of Hong Kong. United Arab Emirates. The finalizing the Hong Kong. Do we have any question regarding this jurisdiction? I see. Fine. So Arab Emirates as a state, the new state with not simple corporate regulation, just because this state has more than 45 free zones. Each of free zone has its own corporate regulation and its own internal procedures. In some jurisdictions, the Islamic law implements, and in some free zones, the common law, and some of them that's the common law based on Sharia law, and so in fact, doing business in U.A.E, we always have to understand that the free zone that you use, it will makes the legal framework that you will depend on the during your business in U.A.E. Starting 2024, there is the revolution in taxation in Arab Emirates. So since creating the state, since creating the free zones, there were no corporate and income taxation in Emirates. But starting this year, the taxation regulation came, and now the basic tax rate of 9% implements for when we tax all corporate incomes. It starts when the profits became more than 95,000, okay, approximately 100,000 US dollars. And the tax base is calculated according to the IFRS rulings. So it means that revenues should be decreased on the amount of costs generated when the revenue is created. And so the gross profit as a taxable amount with basic tax rate of 9%. Also, there is the VAT that exists almost 10 years. So the basic tax rate of VAT in Emirates for the local sales is 5%. And the zero tax rate is implemented for the all goods and services that are sold outside Emirates, and the special types of businesses also they implement zero tax rate of VAT. So you can see them on the presentation slide. Again, as usual, that's the transportation services, so the construction services and etc. But basically, the major services and major sales of goods internally within the U.A.E are taxable by VAT. Emirates, because of their quite young age as a state and as an international business center, they don't have so huge number of double tax treaties signed as in comparison with Cyprus or in comparison with Hong Kong. But still, they work a lot, so the number of these double tax treaties are growing. You always, we strictly recommend to look at the text of these double tax treaties because quite often they implement these double tax treaties only to the state companies, but not to the privately owned companies. But still, so again, the list of double tax treaties you can find on the site of the Ministry of Finance of U.A.E, or again you can request from us the regulations or the rulings of each double tax treaty signed by any countries with United Arab Emirates. Right now, that's the good news again for Emirates, that in fact they were cancelled from the gray zone list that is managed by OECD, and so that's the Organization of European Economics and Development, and because of that, they should be much more compliance-like jurisdiction. Maybe it will take some time, just because they were cancelled from this list in March. So this month it's few weeks ago, and I think we should wait additionally 1 or 2 months to be for U.A.E to be cancelled from regional. From regional lists and from the lists of local regulators all over the world, including European Union and other countries. So, and as I already told, there is no income taxation in U.A.E. That creates huge benefits for the high net worth individuals. It's also creates huge benefits for the companies that want to relocate to U.A.E their teams, because in fact, if we compare the cost on salary, maybe the net salary on U.A.E in U.A.E could be a little bit more than, for example, in Central Europe, but because there is no social and income taxation, if we'll see the gross amount of costs that companies usually carry on within the European jurisdictions, we'll see that U.A.E looks even more favorable in this sense. So, do we have any questions regarding taxation in U.A.E? I think no. Fine. So, United Kingdom, one of the oldest jurisdictions, the International Financial Center, one of the biggest corporate centers in the world. The number of companies registered in UK annually is more than 200,000 entities. So that's the huge amount. That's the Even during pandemic, this amount was not decreased. The huge startup community, the huge venture capital facilities. So everybody knows about it. No, not so many people knows that UK is one of the first countries that started to implement the digital government approach in their regulation, when they created the digital online services that provide an opportunity to the users of these services remotely get the access to the all facilities that state government executes, including the company house, so the authority responsible for the company incorporation, and the authority that maintains the company register, shareholder, directors register, and etc. So the company house has the fully digital access to its services that gives an opportunity for all users to register the company in a minutes or maybe in an hours, just spend few dozens of pounds for the registration, and that makes, in fact, some years ago, when the company house implemented the fully digital approach of registering the company, it's create the revolution in corporate administration industry. What about taxes in UK? So the minimum tax rate of corporate tax is 90%. To use this tax rate, so decreased tax rate, you should get net profits less than £50,000. And if the profits is more than this amount, the corporate tax rate of 25% should be implemented. So everything is quite simple. And the standard tax rate of VAT in UK is 20%. That's the golden standard in the European Union. And there are a few activities that are not taxed by VAT at all, like in fact the booksellers, the newspapers, they don't pay VAT at all. So it's other activities that you can find in the slide. And sales of the products connected to the energy are taxable with the lower tax rate. So also you can find it on the slide. So what about the payroll taxation in UK? So that's the tax rates of income tax for individuals are quite significant. As you see, that's also the progressive tax rate. If the amount of when your income is £1,000 per month, it's not taxable at all. So until the amount of £12,500, you don't pay any tax. And then from 20% tax rate is implemented to the incomes less than £50,000 per year. Above 50,000 and to 150,000, that's the 40%. And everything that goes above 150, as I told, that's the 45%. That's also social insurance exists. And from with the basic rate of social insurance tax as 12%, and the tax from the non-taxable amount of 12,000 to the amount of 50,000 of income, of annual income. All the rest should be social insurance taxation should be done at the rate of 2%. So as you see, that's quite substantial. That's the highest tax rates in income taxation in all these 4 jurisdictions that we use for comparison today. Definitely, UK, the Netherlands and UK, they're the champions of, according to the number of signed double tax agreements. I think the majority of countries, including, in fact, old offshore jurisdictions, have the double tax treaties signed with the United Kingdom. And in fact, it gives an opportunity to create structures quite tax efficient, especially if we speak about holding structures. That gives an opportunity to use such forms of entities as partnerships, and in fact using all limited liability companies with the shareholders residing outside United Kingdom. So in fact, for expats, using UK as jurisdictions for creating their holding infrastructure, holding entities, could be quite beneficial. That's all for now. I see some questions. Give me a second. Yes, I see. Vlad is writing about the promo code and discount. Correct. So if you have any questions regarding this presentation, please don't hesitate to contact us directly, and we will discuss with you your issues.